Hi, my name is Malabonkosi. Thank you for joining today's episode. So, if you're a new family and learn about all things finance, right? So, today's episode, one of my friends requested that I cover this topic related to getting your first credit card. What is it that you must consider when you have a credit card, and how credit cards work in general, all right? So, her name is Lynette. I've known her for like almost 2 years now. We were part of TEDx University of Pretoria, still in existence. It's actually an official society at the University of Pretoria. So if you're in the University of Pretoria, please join and support TEDx University of Pretoria. That was her brainchild. And she's currently working and busy with the YAT Podcast. I'll put up all her links to the various outlets that you can catch the YAT Podcast on. Check her podcast out. So, okay, let's dive straight back to the topic of today, credit card, right? So the first thing that I'm going to cover is the definition and the basic benefits of having a credit card, right? A credit card can be seen as like an unsecured debt. So that's one of the characteristics. It's also seen as a consumer debt. And out of the, as I've already mentioned, it's an unsecured debt. Out of the three unsecured debt, be it credit card, personal loan, and overdraft, right? It is the only one that actually gives you a positive when it comes to your credit score. The other ones, they usually, when you take it for the first time, there's a drop in your credit score, but one like the credit houses, if I might call it that, credit bureaus see that, okay, you are paying your debt according to the scheduled repayment, then it helps you to increase your credit score immediately. And another thing is that there are quite a number of benefits for having a credit card, be that they're usually some form of reward system, be it monetary or discounts and so forth. So that is basically the characteristics of a credit card. Another thing that it differs from the other unsecured debt is that you have what is called a grace period for most credit card, right? Where you don't have to pay any interest. Okay, another thing is that the interest rate is slightly less when compared to a personal loan and overdraft facility. The revolving debt, that just means that there is no end date to say that, okay, you're finished paying, then we close off this credit facility, right? You can have it for as long as you can possibly have it. As long as you want it, as long as you want to continue with having the credit card, I think your bank will allow you to have the credit facilities. The first thing that we're going to cover, since we've covered the definition and the basic benefits of the credit card, is what is it that you need to know when you're getting your first credit card, right? So I'm going to cover about 6 points that you should be aware of when you're getting your first credit card. So in terms of the requirements or the documents, you usually need to be working for at least 3 months before you consider taking a credit card with another bank, right? By another bank, I mean that if you are banking with, let's just say, FNB, and you want to take out credit card with ABSA, right? You should be working for at least 3 months for them to consider approving your application. But if you're banking with FNB and you want to have a credit card with FNB, even if you've been working for a month, they will consider your application. They can still decline it, right? It's not always the case that they will approve it, but 90% of the time, it will be that the bank that you're currently banking with will approve it, even if you've just been working for a month. And then the second thing, if you are going to, for some reason, use a budget facility, right? You might have to take up credit insurance for some banks, because a budget facility will give you maybe, let's just say, a period of up to 60 months for some banks, right, where you're paying off this debt. So for Capital, I think for most of their credit facilities, if you're going to have it for more than 7 months, you will have to get credit insurance, right? So, and another thing is that I think for credit utilization, just like any type of other credit facility, you should try to always not utilize more than 30% of your credit limit. So it does seem a bit weird to say, okay, if I get a credit limit of 50K, shouldn't I be able to use the 50K, right? But that is not how credit actually works, right? You are actually seen as a good debtor, or as someone who's credit worthy if you utilize as little as credit as you are already allocated, right? So be aware of that you shouldn't utilize more than 30% of your credit, so that you always have a healthy credit score. You might consider actually having an emergency fund first before you have you decide to take out a credit card, right? This is just to ensure that you are actually disciplined enough to pay like some monthly fee towards yourself, like you're paying yourself first and you are disciplined in that. So if you can't pay yourself first, how are you going to be able to pay someone else when you when their money is due? So that is just one of the tactics to employ to ensure that yes, I am ready to take this credit card facility. And since it's a consumer debt, most of the things that you'll be taking on a credit card are seen as a liability, right? Because you'll be taking all the consumer items, if we might call it that. So ensuring that you actually have the right type of discipline before you take it out is very essential. So the fourth thing would be that you're not actually reliant on your credit card. So you are budgeting, you are working on, you're living within your means, right? If you're earning 20K per month, that is your budget. You're not heavily reliant, whereby maybe you've already budgeted 5K, extra 5K out on top of the 20K that you already have. As if like you earn 25K whereas you earn 20K. So it shouldn't be something that you're heavily reliant on. It should help you when you need a couple of stuff and you can't really afford it. And sometimes even when you're having like big purchases, like you're buying a couch or you're buying a what is it called, a TV, because of the interest being just slightly lower than, okay, sometimes very lower than most of the other credit facilities, it might be wise to use the credit card, right? Then taking maybe let's just say some kind of getting into a relationship with maybe like a furniture house where you open up like a credit account and you take a TV. You could use your credit card and actually pay off the amount using your credit card, right? But you need to ensure that you're not that reliant on it. It helps you in your journey, not necessarily that it's a crutch for your financial journey. So the fifth one is to actually try and pay it off fully so that you don't have to incur any type of extra interest on it. So as I've said, it has a grace period. For most of the South African banks, it's 55 days. Apart from ABSA was just like, we're just gonna throw in an extra 2 days for you all, so that you might consider us when you're taking your credit facility or your credit card, right? So try to pay it off in that 55 days that you're allocated, so that you don't incur any interest on it. And it'll obviously help you with your credit score, right? So the sixth one is that a lot of people actually think that you have to pay the minimum that you're given. So every single month or every single billing cycle, you will get a credit statement, a credit card statement that says, okay, this is how much money you've spent in this billing cycle, and then this is the minimum amount you need to pay and the due date in which you need to pay it. I've learned that you actually can ask your banker or ask your bank to change those dates to suit your I guess the way you do your bills and debts, right? Whenever you're paying your bills and debts, let's just say you get paid on the 25th and you pay your bills and debts on the 26th. So you can make that arrangement with your bank to say that, okay, can you please actually change the billing cycle to suit my debt and bills cycle, right? So And in that, you don't have to pay the minimum, as I've already said. You can pay the maximum amount and actually try to ensure that it's always the maximum amount that you can possibly pay it out. So those are the 6 points that I have when it comes to getting, like, the points that you have to consider when you're getting your first credit card, right? Okay, so thank you. I'm going to go to the second part just now.